$487 billion, created in a single trading day. Not from a product launch, not from a merger, not from some blockbuster earnings report nobody saw coming. From a memory chip company almost nobody outside the semiconductor industry had ever heard of, going public for the very first time, and by lunchtime on its opening day, becoming worth more than China's biggest bank. And here's the detail that should genuinely stop you. Part of the technology inside those chips may have started as handwritten notes, smuggled out of a rival company's factory floor, one gas flow setting and one photoresist formula at a time, specifically because handwriting doesn't leave a digital trail. This is a real company. This actually happened this year, and by the end of this video you're going to understand exactly how a firm carrying that kind of baggage still became worth more than a bank that's been operating for over a century. Stick around, because there are two completely different stories colliding inside this one, and almost nobody covering it connected them properly. I want one word from you at the end: legit or loot. You'll know exactly which one you believe by the time we're done. Let's get into it. Here's the headline version first, because the raw numbers alone are worth sitting with. A company called Changshin Memory Technologies, known in the industry simply as CXMT, went public on Shanghai's Star Market on July 27, 2026. It priced its shares at 8.66 yuan. By the close of its very first day of trading, those same shares were worth 49 yuan, a 466% gain in a single session. That single-day pop pushed CXMT's market value to roughly 3.3 trillion yuan, somewhere between 487 and 539 billion US dollars, depending on exactly when you measured it that afternoon. Either number is enough to make this the largest semiconductor listing in mainland Chinese history, and enough to instantly overtake the Industrial and Commercial Bank of China, one of the largest banks on the entire planet, as the most valuable company listed on any mainland Chinese exchange. It also passed Intel, America's own flagship chipmaker, in market value, on its very first afternoon of trading. Now let's actually understand what this company does, because the business itself is a genuinely important part of this story. CXMT makes DRAM. That stands for Dynamic Random Access Memory, the specific kind of chip that temporarily holds data, while your phone, your laptop, or an AI server is actively working. It's not the flashy processor everyone talks about. It's the quiet, essential memory sitting right next to it. And right now, thanks to the AI boom, global demand for it is exploding faster than factories can keep up. Think about it this way. Every AI data center being built right now needs enormous amounts of this exact kind of memory to actually function. And that demand is now competing directly with the memory that goes into your next phone, your next laptop, and your next gaming console. When one side of that competition suddenly needs far more supply than existed a year ago, prices for everyone move, and companies capable of adding real new supply become extremely valuable, extremely fast. CXMT is currently the world's fourth largest DRAM maker, holding roughly 7.67% of the global market as of last year, still trailing well behind the three companies that have dominated this industry for decades: Samsung, SK Hynix, and Micron. But CXMT's own numbers explain exactly why investors got this excited. The company guided for first-half 2026 revenue of up to 120 billion yuan, more than 7 times what it made the same period a year earlier, alongside a swing from an outright loss into tens of billions of yuan in actual profit. A company that was losing money not long ago is suddenly one of the most profitable growth stories in the entire Chinese stock market, and investors piled in accordingly, trading over 140 billion yuan worth of shares on debut day alone. That's shock number one. A 10-year-old company, founded in 2016 in the city of Hefei, becoming worth more than a bank that's existed for generations, in the space of one trading session. On its own, That's already a massive story about how fast China's chip industry is scaling. But here's where the second shock comes in, and it's the part that actually changes how you should think about everything you just heard. CXMT didn't build this position purely through its own internal research. According to South Korean prosecutors, at least 10 former Samsung employees have been indicted for allegedly leaking core DRAM manufacturing technology directly to CXMT, going back to shortly after the company was founded. Investigators say CXMT specifically recruited executives and senior engineers away from Samsung, the only company mass-producing 10-nanometer class DRAM at the time, and that the knowledge those employees brought with them helped CXMT produce China's first domestic 10-nanometer chip in 2023. Technology prosecutors say later fed directly into CXMT's more advanced high-bandwidth memory work as well. And the specific detail of how this allegedly happened is genuinely wild. According to reporting on the case, one former Samsung researcher spent roughly 5 years handwriting detailed manufacturing process steps, over 600 of them, covering things like precise gas flow ratios and photoresist chemical settings before ever leaving the company. Handwritten notes, not files, not emails, not anything that shows up in a corporate audit log or a data loss prevention system. Investigators say that's exactly the point. It's a method built specifically to be invisible to the kind of digital security systems most companies actually monitor. Companies spend enormous amounts of money on firewalls, encrypted servers, and access logs designed to stop exactly this kind of theft. And a person willing to spend 5 years quietly transcribing information by hand simply walked straight around all of it. South Korean prosecutors say the leaks caused damage running into the trillions of won, and lawmakers there have since pushed to raise the maximum penalty for this exact kind of leak to as much as 18 years in prison. Of the 10 individuals indicted in this specific case, 5 remain in custody as this story continues to unfold, while the other 5 were released on bail pending trial. So here's the honest scoreboard on this company, because both the "this is just theft" dismissal and the "this is a genuine engineering triumph" narrative are each missing real pieces of the picture. Here's what's true, and it matters for keeping perspective. CXMT's revenue and profit growth are real, verified, audited numbers, not manipulated hype. The company genuinely has scaled production, genuinely captured real global market share, and is genuinely shipping working chips that real customers are choosing to buy. This isn't a shell company riding a speculative bubble with nothing behind it. But here's what the bull case conveniently leaves out. Multiple governments have looked at exactly how CXMT got here and concluded there's a real, documented, prosecuted trail of stolen intellectual property sitting underneath at least part of that technical progress. Those aren't separate stories. They're the same company. And the geopolitical baggage doesn't stop at the espionage case. The Pentagon added CXMT to its list of companies it alleges have ties to the Chinese military back in June of this year. Reuters has reported CXMT was approved for addition to the U.S. Commerce Department's entity list by an interagency committee, though full implementation is still pending as of this recording. A federal restriction on CXMT chips being used in certain U.S. government contexts has already been in effect since 2022. If prosecutors secure convictions and the new 18-year maximum penalty framework holds up, it sends a real signal about how seriously governments are starting to treat this exact kind of talent poaching and technology transfer not just in memory chips, but across the entire semiconductor industry. And watch whether CXMT can actually keep closing the technical gap with Samsung, SK Hynix, and Micron on its own merits from here forward, because a $100 million valuation built on a handful of quarters of explosive growth is a very different thing from a company that's proven it can sustain that lead for the next decade. Let's bring this together, because individually these are just numbers, but stacked on top of each other they tell you exactly what's actually happening here. $487 billion. What CXMT was worth by the end of its first trading day. 466%. How much its stock gained in that single session. 10 years old. How long the company has actually existed. 10 former Samsung employees. Currently indicted over allegations they leaked the technology that helped build it. 600 handwritten process steps. What investigators say one of them memorized and transcribed by hand to avoid detection. 18 years. The new maximum prison sentence South Korean lawmakers want for leaks exactly like this one. 3 of the world's largest PC makers. Already using CXMT's chips in real products shipping today. Restrictions or no restrictions? 0. The number of major restrictions currently stopping them from doing it. Individually, these are just facts about a stock listing and a court case on the other side of the world. Together, they describe a company that may have taken a serious shortcut to get here, and got rewarded with $500 billion anyway. Because right now, the world simply needs the chips more than it cares about how they got made. If this video actually helped you understand what's really going on underneath this headline, better than the stock charts did, hit subscribe right now, because I'm tracking exactly how the entity list decision, the South Korean trial, and CXMT's next earnings report play out over the coming months, and you don't want to be the last one to find out. Drop a comment with one word. Legit. If you think CXMT earned this valuation fair and square. Loot. If you think this is stolen technology getting rewarded at scale. I'm reading every single one of them. Thanks for watching, and I'll see you in the next one. And existing American export controls already block CXMT from accessing the most advanced chip-making tools available, including cutting-edge EUV lithography machines from companies like ASML. Here's the twist that makes this story genuinely strange, though. Despite every single one of those restrictions, some of the world's biggest technology companies are already quietly using CXMT's chips anyway. According to reporting from Nikkei Asia, 3 of the largest PC makers on the planet, HP, Asus, and Acer, have all completed qualification testing on CXMT's memory chips this year, and have started using small amounts of them inside real notebook computers already shipping to customers. Apple has reportedly considered using CXMT chips as well. None of these companies are doing this because of politics. They're doing it because the global memory market is in the middle of an unprecedented shortage, driven almost entirely by AI data centers buying up supply that used to go to phones, laptops, and gaming consoles. And CXMT happens to be one of the only companies on Earth currently able to offer meaningful additional volume at a moment when literally everyone in the industry needs more chips than exists. Think about what that actually means for a second. These are some of the most brand-conscious, reputation-conscious companies in the entire technology industry. Companies that spend enormous amounts of money protecting exactly the kind of image that a supply chain scandal could damage overnight. And they're choosing to use components from a supplier that a foreign government's own Defense Department has formally flagged, because the alternative, simply not having enough memory chips to build their products, is apparently the bigger business risk right now. That's not a small detail. That's the entire memory shortage in one sentence. That's the real tension sitting underneath this entire story. A company partly built on documented stolen technology, blacklisted by the Pentagon, restricted from the most advanced manufacturing tools in the world, is simultaneously becoming essential to the exact same global supply chain that's supposed to be keeping it at arm's length. Markets don't really care about that contradiction. Markets care about supply and demand, and right now demand for memory chips is so far ahead of supply that even a geopolitically radioactive supplier gets treated as a serious investment, not a company to avoid. Before we get to where this goes next, it's worth understanding why investors are even willing to bet this big on a memory chip company in the first place. Because the DRAM industry has a genuinely brutal history. Memory chips are famously cyclical. Prices boom when supply is tight, then crash hard when every manufacturer rushes to add capacity at the same time and the market floods. Skeptics looking at CXMT's IPO point exactly to that pattern, arguing that today's explosive profit numbers are a snapshot of an unusually tight moment in the cycle, not necessarily a sustainable new normal. Bullish investors counter that this specific boom is different, because it's not being driven by normal consumer demand ebbing and flowing. It's being driven by AI infrastructure spending that shows no sign of slowing down anytime soon. Both sides of that argument are genuinely reasonable, which is exactly why CXMT's valuation has become such a lightning rod for debate inside the finance world, not just the geopolitics world. Watch the U.S. entity list decision closely, because if that restriction actually gets fully implemented, it could meaningfully complicate how comfortable companies like HP, Asus, and Apple feel continuing to buy from CXMT, regardless of how badly they need the supply. Watch the South Korean espionage trial too.